Hey there, crypto enthusiasts. Welcome back to Matrix Hacks, your ultimate destination for navigating the ever-evolving world of cryptocurrencies. Today, we're diving deep into the future with the top 8 cryptocurrencies to buy and invest in 2023. If you're ready to ride the digital wave, stick around because you won't want to miss this. But before we unveil the hidden gems of 2023, imagine this. What if I told you there's a way to turn the uncertainties of the crypto market into a strategic advantage? Intrigued? Well, grab your digital surfboard because today, we're riding the waves of opportunity. 1. Bitcoin. Bitcoin has been around for the longest of any cryptocurrency. It's easy to see why it's the leader, with a price and market cap that are much higher than any other crypto investment options. Many businesses already accept Bitcoin as payment, which makes this cryptocurrency a smart investment. Visa, for example, transacts with Bitcoin. And after a long cryptocurrency hiatus, Stripe, through its partnership with OpenNode, allows merchants to settle transactions and convert payments to Bitcoin. The larger banks have begun to incorporate Bitcoin transactions into their offerings as well. While Tesla accepted Bitcoin only briefly, it might again if mining it becomes more environmentally friendly. In a step toward that end, Blockstream and Block, formerly known as Square, broke ground on a Bitcoin mine in Texas last November. The mine will be fully powered by Tesla's solar array and megapack battery, CNBC reported in April 2022. Several companies, including Fidelity and BlackRock, hope to create spot Bitcoin ETFs, but so far the Securities and Exchange Commission has rejected their applications. However, the ticker for BlackRock's spot Bitcoin ETF, briefly, and perhaps erroneously, appeared on the Depository Trust and Clearing Corporate's website, leaving investors to speculate about whether approval might be imminent, CoinDesk reported. 2. Ethereum. Ethereum is a network that allows developers to create their own cryptocurrency and deploy smart contracts utilizing the network. While Ethereum is far behind Bitcoin in value, it's also far ahead of the other competitors. Even though it came out years after some other cryptocurrencies, Ethereum has far exceeded its place in the market because of its unique technology. It's currently the most popular blockchain and the second largest cryptocurrency behind Bitcoin. It stands to gain even more ground following the deployment of an upgrade, nicknamed the Merge, that shifted Ethereum to a proof-of-stake-based consensus. The upgrade has reduced the number of coins and rendered Ethereum mining obsolete. The Merge has also drastically reduced Ethereum's energy consumption. Although Ether doesn't have the widespread acceptance Bitcoin does, traditional companies are coming on board. Fidelity, for example, bulked up its tech workforce to create the infrastructure needed to offer Ethereum custody and trading services to its customers, the Wall Street Journal reported. 3. BNB. Because of its performance over time, Binance Coin, now called BNB, has proven to be one of the more stable investment options, relatively speaking. It's the native token on Binance, which is the world's largest cryptocurrency exchange, and on Binance.us, the version US residents must use. But despite its extensive functionality and the coin's success in Binance subprojects, BNB is still a highly volatile investment. One thing working in BNB's favor is that Binance burns or destroys coins once per quarter. The most recent burn, which BNB Chain reports occurred on October 16, reduced the coin supply by 2.14 million tokens, about 439 million worth. It didn't affect prices in the short term, but managing the number of tokens can have a positive effect over time by creating scarcity. BNB has a total supply of 151,704,606, all of which are circulating. It's worth noting that Binance has taken a leading role in stabilizing the crypto industry following the collapse of the FTX exchange. It has devoted $1 billion to a recovery fund established to keep struggling players afloat, CNBC reported. 4. Cardano. The Cardano network has a smaller footprint, which is appealing to investors for several reasons. It takes less energy to complete a transaction on Cardano than on a larger network like Bitcoin. This means transactions are faster and cheaper. In 2021, Cardano launched a hard fork, an upgrade that increased functionality, in this case, enabling smart contract deployment. Another hard fork, this one called Vasil, launched in September 2022, and should improve the Cardano blockchain's scalability, Mint reported. Cardano recently launched a test version of a platform called AdaSwap, where developers can build decentralized finance apps. AdaSwap could elevate Cardano's status as a Web3 network and drive up the price of its coin. While the coin is number 8 in terms of market value, Cardano's non-fungible token protocol is the world's second largest, according to Today. 5. Polygon. Polygon was created by a development team that made significant contributions to the Ethereum blockchain platform. Polygon is designed for Ethereum scaling and infrastructure development, according to CoinMarketCap. As a Layer 2 solution, it expands Ethereum into a multi-chain system, improving transaction and verification speed. Polygon has backing from the Binance and Coinbase cryptocurrency exchanges. Its token, Matic, is used for payment services, transaction fees, and as a settlement currency. In July 2022, Polygon announced in a press release that it had launched Polygon ZK EVM, the first Ethereum-equivalent scaling solution that works seamlessly with all existing smart contracts, developer tools, and wallets. It does this with a type of cryptography called zero-knowledge proofs, which lower transaction costs and increase throughput. Polygon hosted over 53,000 decentralized applications as of October 2022, including some from companies like Meta and Stripe, and more recently, Credit Suisse and Deutsche Bank. In addition, Polygon fully supports the Tether stablecoin, which could contribute to the network's future growth. Another plus is its investment in carbon neutrality, which occasionally has prompted price rallies. 6. Tera 2.0. The Tera Classic blockchain used stablecoins, that is, coins pegged to fiat currencies such as the US dollar, South Korean won, and the International Monetary Fund's special drawing rights currencies, to power global payment systems, according to CoinMarketCap. Its native coin, now using the symbol LUNC, stabilized the prices of the blockchain's stablecoins. However, Tera crashed and burned in early May 2022, spurred by stablecoin volatility and overall skittishness in cryptocurrency markets, halting the cryptocurrency's strong year and driving some crypto platforms into bankruptcy. After the crash, Tera rebranded the original network as Tera Classic, LUNC, and launched Tera 2.0, Luna, a new blockchain without an algorithmic stablecoin, in an effort to stabilize the Tera ecosystem and help investors who lost money recoup some of their investment. LUNC's coins trade separately from the Luna coins that come with Tera 2.0. 7. Avalanche. Avalanche is a relatively new Layer 1 foundational blockchain that can execute smart contracts. It was founded as an Ethereum competitor by Ava Labs and computer scientists at Cornell University, one of whom, former Professor Emin Gün Sirer, is a veteran in cryptographic research, according to CoinMarketCap. Avalanche's 3 individual blockchains can validate transactions independently. This makes Avalanche scalable and able to handle large volumes of transactions, up to 6,500 per second. As a result, it's increasingly popular among Ethereum projects, US News reported. As for the coin itself, Bloomberg reported last spring that Avalanche had beat out Ether as Tera's reserve currency for its own UST stablecoin. Luna Foundation Guard, the non-profit organization that supports Tera, intended to acquire $100 million worth of Avalanche as part of that initiative. 8. Chainlink. Chainlink uses a decentralized Oracle network to facilitate secure interactions between blockchains and external data feeds, events, and payment methods the developers hope will allow smart contracts to become the dominant form of digital payment, according to CoinMarketCap. One thing working in Chainlink's favor is a strategic partnership with Google, under which Google uses Chainlink's protocol to connect users to its cloud services, Benzinga reported. Chainlink is also the choice for the new inflation index from decentralized finance company Truflation, built to serve as an alternative to the consumer price index. Whereas the CPI measures inflation using survey data, Truflation's index uses 10 million data points from over 40 different sources to measure inflation more dynamically, accurately, objectively, and transparently. Chainlink Labs advisors include former Google CEO Eric Schmidt, DocuSign founder Tom Gonser, and former LinkedIn CEO Jeff Weiner. Run a quick online search and you'll find dozens of recommendations for how to invest in cryptocurrency. In choosing the top 8 picks, The following factors were considered. 1. Longevity. How long has the cryptocurrency been around? New cryptocurrencies aren't immediately ruled out, but having historical data for comparison helps you see how a company has performed up until now. 2. Track record. If you see stability in prices, that's a good sign. If you notice that the cryptocurrency is gaining traction and becoming more valuable with time, that's even better. 3. Technology. How does the platform compare to others in terms of usability and security? The first thing you want to look for is the speed at which transactions occur. The network should be able to handle transaction traffic with ease. You also want to make sure your investment is secure. Most cryptocurrencies use blockchain technology, making all transactions transparent and easy to track. Blockchain technology doesn't necessarily make it harder for hackers to steal your cryptocurrency. It does make it easier to track your investment so it can be recovered instead of being lost following fraud. 4. Adoption rate. How many people are investing in the cryptocurrency you're considering? When you see a high level of adoption, that means the cryptocurrency has better liquidity. Trading, selling, or spending will be easier in the future. There's no question about it. Cryptocurrencies are here to stay. The question becomes, where is the best place to invest your money in the market? As you decide which cryptocurrency is the best investment for you, here are some other things to keep in mind. The speed at which transactions are completed. The fees associated with transacting. The ability to use your cryptocurrency for regular purchases and bank transfers. If you're strictly looking to invest without transacting within the network, remember that cryptocurrency isn't a get-rich-quick scheme. Instead, you should consider it a long-term investment. Subscribe. Check out the description box for valuable resources and links.